And welcome back. Huge changes are occurring in our US housing market as the number of reduced price listings has more than doubled compared to 12 months ago. On top of that, last week, housing inventory posted the biggest increase in over a year. So in today's video, I'm going to take a deep dive into what we're seeing right now in our US housing market regarding home prices, housing inventory, price reductions, and of course, much more. And this will give us some indication of what lies ahead in our US housing market, especially as we approach the spring home buying season. Time will tell regarding that. But before we get started, if you guys are looking for a real estate agent referral where you're looking to buy or sell a home in virtually any parts of the whole United States, then check out homeandmoney.com/Jason to get started today. And with that said, let's begin today's video. This is actually based on my own analysis of Realtor.com's latest housing market data. They actually haven't provided a weekly update in about 3 weeks now. But their update is right here, which just like my previous videos, I didn't even read because I'm a nerd. Instead, go right here, which is Realtor.com/research/data. And click on this link right here. It takes you more or less to this right here, which is a weekly view of year-over-year changes in asking prices, housing inventory, new listings, days in the market, as well as the number of reduced price listings. Again, they haven't provided an update in about 3 weeks. But I want to share some latest trends because there's some very big changes occurring right now in our US housing market. I'm actually really excited to share this video with you guys. So the most recent week they have for us, which is actually just published today, which is January 26th, is actually for the week ended January 21st of this year. Here's what they posted regarding the median asking price in the US. It only increased by 7.3% on a year-over-year basis. Actually, this is something I just noticed. This is actually the smallest increase of asking prices on a year-over-year basis in at least 1 year. On top of that, asking prices, by the way, of course, this is national trends, right? Every market's different, but on a national level, we only saw single-digit increases in asking prices for actually the past 7 weeks. But this year, entirely different because every single week this year, and of course, over the past 7 weeks, we've been seeing single-digit increases of asking prices nationwide. And by the way, you can see the trends right here because ever since December 3rd, going all the way until the beginning of the year, we saw double-digit increases of asking prices in the range of approximately 10% to around 18%. Now it only has increased by 7.3% last week. So that's asking prices. Let's have a look at housing inventory. Some big changes here. And this is more or less what Redfin's reporting as well. Big increases of housing supply on a year-over-year basis. So last week, housing supply, which of course is active listings, the number of houses for sale in the US, increased 69.4% on a year-over-year basis. And this is by far the biggest year-over-year increase in the last 1 year. The biggest increase over the last 12 months, to say the least. Before that, the biggest increase was actually right here, the week ended December 31st, where housing supply increased by 67.9%. But last week, it increased by 69.4%. And by the way, as a note right here, this is in line with what AltosResearch.com is reporting as well. They're reporting gains of 71% compared to 12 months ago. Realtor.com is reporting gains of 69.4%. And again, the biggest year-over-year increase in at least the past 1 year. And again, just like I mentioned in my previous videos, these gains of housing supply is very much significant and something we should be watching because the increases of housing supply is due to a decrease in home buying demand and not due to a giant increase of new listings. Because in fact, new listings have been decreasing for quite some time, and more on that here in just a little bit. So when looking at housing supply in the US has been increasing in 17 out of the last 19 weeks. Housing supply increasing in 17 out of the last 19 weeks, despite the fact we've been seeing fewer new listings for the past 29 weeks in a row. And here's exactly what I mean by that, because here's new listings, this column right here, or right there, I should say. New listings have been declining for the past 29 weeks in a row. So despite this decrease of new listings declined by 29 weeks, housing supply has been more or less increasing ever since May of last year. Now, here's something very, very important you guys should be aware of, because if you guys follow the channel, you guys all know I've been talking about this huge decrease of new listings, but because we've been seeing this increase or actually decrease of home buying demand, housing supply has been increasing. So the cause of the increase of supply is due to a pullback in demand and not due to a giant increase of new listings. So have a look at this. We only saw single-digit declines in new listings for the past 3 weeks. So when looking at the differences compared to 1 year ago, new listings have only decreased by single digits. Whereas from October 1st all the way until the end of November, we saw double-digit declines compared to 1 year ago. So last week, it only decreased by 4.7%, whereas let's see, November 26th, for example, it decreased by 17.3%. Therefore, because we're only seeing single-digit decreases in new listings on a year-over-year basis for the past 3 weeks in a row, is this a housing market shift? Are we going to be seeing more people list their houses for sale, causing housing inventory to increase further? If that does happen, even if new listings start to increase, then housing supply will increase as well, which will put more downward pressure on home prices. I'm personally very excited to see what's going to be happening with new listings because, of course, new listings have been declining for the past 29 weeks in a row. However, if we get into an environment where new listings start increasing big time, then housing supply will increase as well, which of course will cause further declines in home prices as well. Of course, time will tell, especially in the early spring home buying season, so I'll definitely keep you posted. Make sure you're subscribed to the channel as well. I'll keep you posted with the latest developments. So let's also talk about how fast or how slow houses are selling in the US as well, because last week, it took approximately 14 days longer to sell a house compared to 12 months ago. So it's taken approximately 2 weeks longer to sell a house compared to 1 year ago. Again, though, days in the market is based on closed home sales. Therefore, this is a lagging indication of our housing market. Now, having said that, it's taking longer for houses to sell compared to the same time period 1 year ago. For now, the past 26 consecutive weeks. Houses taking longer to sell compared to 1 year ago for the past 26 weeks in a row. Also on top of that, last week we saw the biggest increases of days in the market compared to 1 year ago, up by 14 days, meaning houses taking approximately 14 days longer to sell compared to 12 months ago. Let's also talk about the number of reduced price listings compared to 12 months ago as well. The number of reduced price listings has increased a whopping 166.4%. 166.4% increase compared to the same week 1 year ago. And this is by far the biggest increase on a year-over-year basis in at least the last 1 year. Also, we've been seeing triple-digit increases in the number of reduced price listings for 10 out of the last 12 weeks. As you can see right here, we saw triple-digit increases in the number of reduced price listings for 10 out of the last 12 weeks. The only weeks we saw increases of less than triple digits was for the week ended December 31st, as well as November 26th. There's a couple of theories I have regarding why we're seeing this increase in the number of reduced price listings, and that is kind of twofold. Number one, of course, we're seeing more overzealous home sellers, people listing their houses for far more than they're worth, and therefore they have to reduce their asking prices in the weeks and months ahead. Number two, though, is that because we could potentially see more price reductions because housing inventory has increased 69.4% last week. We're seeing more houses being listed for sale, and therefore we're seeing an increase of the number of reduced price listings as well. However, though, as a note right here, the share of reduced price listings has been more or less decreasing over the past 2 months. That's based on data from altosresearch.com, which is right here. So for the week ended January 20th this year, the share of reduced price listings, according to Altos, was at 35%. If you guys follow the channel, you guys all know I've been talking about how long it's been taking for that share to double. But the more recent trend that we've been seeing, though, is a decrease in the share of reduced price listings. So for the week ended November 11th last year, the share was 43%. So the share of reduced price listings has been more or less declining ever since November 11th last year. And in fact, it has decreased by about 8 percentage points over the last 2 months. So to briefly summarize this, we're seeing an increase in the number of reduced price listings compared to 1 year ago. However, the share of reduced price listings has been more or less declining ever since mid-November last year. On top of that, for the share right now at approximately 35%, this is on par with the lowest levels since July 15th last year at 35%. However, though, comparing the same time period over the last 3 years, we're still very much at elevated levels. At 35%, take a look at this. The share right now, again, at 35%, the lowest levels since approximately mid-July last year. But at 35%, this is much higher compared to a year ago at 21%, and 2 years ago at approximately 21% as well. And at pre-COVID levels back in the end of July, or actually the end of January 2020, the share was at 26%. So when looking at the same time period over the past 3 years, we're still very much at elevated levels. Now, before I share a summary in today's video with also some kind of predictions as well, I also want to share how this last week compares to years past going back to 2018. And by the way, Realtor.com only provides weekly data going back to July of 2017. So I only can provide going back to 2018 in today's video. So obviously in 2022 as well as 2021, we saw a big increase of asking prices on a year-over-year basis, increasing by double digits. Also, we saw a huge decrease of housing inventory because we had such a high demand, which basically depleted all new listings. So housing supply overall decreased big time over the past 2 years. But what really is the best kind of comparison would be this week right here, or the week ended January 19th of 2019 compared to now, because back in 2018 was the most recent year in which mortgage rates actually were increasing, went from about 4% to around 4.5% by year end in 2018. But in 2018, I should say January 19th, 2019, asking prices only increased by 7%, which is on par with last week's levels. Here's what's not on par though, a 7% gain of housing supply back in January 19th, 2019, whereas this year, a whopping 69.4% increase. Also, something else that really stands out to me as well is that this right here. Back in 2019 in January, only a 30% increase in the number of reduced price listings, whereas this year, a whopping 166.4% increase. So I know that was a lot to cover in today's video, so I actually want to provide a summary as well as some predictions here as well. So number one, inventory has been rising in the US for 17 out of the last 19 weeks, and it rose a whopping 69% last week. This growth rate is very much significant though, because new listings have been declining for the past 29 consecutive weeks. However, though, the gap between last year and this year for new listings has been shrinking though, because it has declined by single digits for the past 3 weeks. In other words, new listings were more or less decreasing by double digits from the beginning of October until the end of December last year. So this is what we're seeing right now regarding that right here. Let me unhide this. So again, new listings only decreasing by single digits over the past 3 weeks, whereas before that, it was more normal to see double-digit declines of new listings. And number two, mortgage rates in general have been more or less on a downward trend this year thus far. We went from approximately a 6.5% average rate at the beginning of January, and now rates are approximately at 6.20% for people with exceptional credit for a 30-year fix. And number three, we saw a huge increase in the number of reduced price listings over the past 3 months, and also triple-digit gains compared to 1 year ago in 10 out of the last 12 weeks. On top of that, the share of price reductions has been more or less on a downward trend ever since mid-November last year. And of course, number four here, houses are taking longer to sell compared to 1 year ago for the past 26 consecutive weeks. Again, though, this is a lagging indication because this is based on closed home sales. So what are some potential changes ahead given the fact that mortgage rates have been more or less above 6% ever since October 1st last year? Number one, average rates are around 2.4 percentage points higher compared to 12 months ago. This causes a 24% decrease in buyers' purchasing power because rates have decreased or actually increased by about 2.4 percentage points, causing a 24% decrease in buyers' purchasing power. Number two, housing affordability is still an issue in the US. However, though, it has been improving though because we've been seeing recent declines in rates as well as home prices as well. So for example, buyers looking to buy an average price home today would save approximately $240 per month compared to the beginning of November. This is because rates went from about 7.4% at the end of October, and now rates are approximately 6.1 to 6.2%. That saves the average home buyer approximately $240 per month in their average monthly housing payment. And number three, we'll likely see more declines in home sales, especially in the near term. This could be very much significant because we've been seeing huge decreases in pending home sales. So based on my own analysis of the National Association of Realtors data for pending home sales from November, pending home sales fell to the lowest levels on record, excluding the onset of COVID, falling to the lowest levels on record, excluding more or less May of 2020. And of course, because we're seeing huge decrease of contracts being signed between buyers and sellers, this could cause a significant decrease in home sales in the next 1 to 2 months. However, though, on a national level, home sold prices have been more or less flat ever since November of last year. What I mean by that is that home prices have been hovering around a 1% gain on a year-over-year basis for quite some time. Median sold prices here in the US have been hovering around $350,000 to approximately $355,000 ever since November last year. Now, of course, having said that, home prices have decreased by about 10% ever since June of last year. Big changes ever since more or less May and June of last year, but not a whole lot of movement ever since November, though, which is kind of interesting to see. Number four, to combat inflation, of course, the Fed plans to continue raising the federal funds rate. Of course, this increases interest rates for HELOCs or home equity line of credits, credit cards, and new auto loans. But of course, saving rates also increase as well when the Fed increases the federal funds rate. However, though, we're starting to see inflation slow down, so rate hikes by the Fed are expected to be a lot less than 2022. So for example, the street is expecting that the Fed is going to increase rates by 25 basis points in the next two meetings, which is February 1st as well as March 22nd. In comparison, the Fed raised rates by 75 basis points 4 times in 2022. And of course, how much the Fed decides to raise rates depends on inflation data that's going to be released in the months ahead. And number 5, mortgage rates were above 7% for the vast majority of October. And we're seeing the true effects of these high rates in November and December stats, giant decreases in closed home sales, huge decreases in pendings, as well as price declines. So on a national level, again, home prices have decreased by about 10% ever since June last year. And number 6, this is something new here because we're starting to see some very early signs that home buying demand may be potentially been increasing. Because mortgage purchase applications have been increasing for the past 2 weeks in a row. Of course, that's based on data from the Mortgage Bankers Association, or the MBA. Applications for home purchases using loans have been increasing for the past 2 weeks in a row. However, though, compared to 1 year ago, applications are still down by about 39%. So this is not going to be a repeat of the spring home buying season that we saw in 2022. At least that's what it appears to be. Another very early sign that home buying demand may be potentially been increasing is that new home sales, which are defined as a contract being signed between a buyer and a builder, have been increasing for the past 2 months in a row. We saw an increase in November and a slight increase in December regarding brand new home sales in the US. And lastly, based on data from Redfin for mid-January, pending home sales have been starting to increase. However, they're still well below last year's levels by double digits, down about 26% on a year-over-year basis regarding contracts being signed between buyers and sellers. And obviously, this is very early signs that home buying demand may be potentially increasing, but we need a lot more data, and I'll definitely keep you posted. Number 7, these videos, and especially this video, take me hours and hours to make. So I hope you guys got a lot of value of today's video. And of course, if you did, I appreciate you. Thank you so much for watching this video, and I'll see you on the next video.